Something unbelievable happened on Friday, November 10th after market close. I want you to take a look at this time here on this article, 4:44 p.m. Eastern time. You guys know that the market closes at 4 p.m. Eastern time. So Moody's, one of the three credit rating agencies, remember we have Moody's, Fitch, and S&P, Standard & Poor's. Moody's cuts U.S. outlook to negative Friday after market close, right as the S&P 500, let me pull up the chart currently. Sorry, I was looking at historical data, but right as the S&P 500 was up against this resistance trend line after the strongest week of 2023. If this does not raise suspicion, then I really don't know what you're thinking. This is definitely, the timing of it is suspicious, right? That Moody's cuts the U.S. outlook to negative. I'm going to talk about what that means. Obviously, earlier in the year, we saw Fitch downgrade the U.S. debt, the U.S. long-term debt, to AA plus from AAA, which is the highest rating. That was only the second time in history that happened. The first time happened in 2011, on August 2011, when Standard & Poor's announced that they are going to downgrade the U.S. debt. This came as just a massive shock for those of us who remember this. This was right after the great financial crisis. We thought that maybe we were going to recover, and then Moody or S&P hits us with a downgrade for the first time ever. We didn't know how to deal with it because the country's debt has never been downgraded. So in this video, we are going to get into what this Moody's negative outlook means, because I think there should be a distinction made between a negative outlook and an actual downgrade. I've seen online chatter conflating this with a downgrade. This is not a downgrade. This is a negative outlook. So we're going to be looking historically at how the market performed, whether the market can continue this historic rally into December and give us a nice Santa rally, or will this be the end of this rally before further downside, maybe matching the bottoms that we saw in late October or even dropping below? I'm here to give you this analysis on this channel. Obviously, as always, no BS, straight up analytical, data-driven analysis. Last week, I also wrote up my investment thesis on gold, bonds, oil, as well as small caps. So if you want that, make sure you click the link in the description below and take advantage of the holiday code that you see there. And our next mastermind, we're going to be starting with option selling, is going to be starting in a week. If you want to be a part of that Mastermind 3.0, make sure that you get your name on this wait list. The massive discount for that mastermind will not be published anywhere, so you have to be on this wait list to get it. Make sure you get your name on the wait list. All right, so what exactly happened? Moody's, as I said, there's three credit rating agencies. There's Fitch, Moody's, and Standard & Poor's, or S&P. S&P was the first ratings agency to downgrade U.S. debt in 2011. And fun fact, a lot of people don't know this, but S&P was one of the corrupt, they're all corrupt, all three of them are corrupt, but it was one of the three corrupt ratings agencies back in 2011, or sorry, earlier in the great financial crisis, that was actually rating the subpar mortgage-backed securities, was actually rating them higher than they actually were, which to me was a crime against humanity, because that led to the downfall of the entire global financial system. And obviously nobody paid a penalty for it. But after Standard & Poor's downgraded U.S. debt, the U.S. government then opened up an investigation into Standard & Poor's involvement in the great financial crisis, and the head of Standard & Poor's stepped down a week later, and then they retracted this eventually. What happened was Moody's cut U.S. outlook to negative. Why? Because the U.S. is facing a government shutdown. The government is only funded through next Friday. As of the time of this recording, that means that would be, what, the 17th? Right now, we are on the 12th, right? So they're only funded through next Friday. Now, a government shutdown and the debt ceiling are not the same thing, right? The debt ceiling is the ability for the government to borrow in order to spend. And a government shutdown is basically a shutdown of the government workers. And what they do is they deem some workers essential and some workers non-essential. The essential workers still will work through the government shutdown, but they're not paid until after the shutdown is over. The non-essential workers will not be working for the government during the shutdown period. So the debt ceiling is the necessity to raise the debt ceiling in order to borrow more money, because the debt ceiling is a limit on how much the government can borrow. And a government shutdown is basically a shutdown until Congress approves the money that they have borrowed, until Congress agrees and approves on how that money is going to be appropriated, right? So right now we are facing a government shutdown, and that is one of the reasons that Moody's cuts the U.S. outlook to negative. Now, we face government shutdowns plenty of times without a negative outlook, right? So this isn't the only thing. Here's the official statement from Moody's. In the context of higher interest rates without effective fiscal policy measures to reduce government spending or increase revenues, Moody's expects that the U.S. fiscal deficits will remain very large, significantly weakening debt affordability. So if we take a look at the national deficit, it's at 1.7 trillion. Right? The deficit is basically when the government spending exceeds its revenues. And remember, the government gets revenues from two sources, taxes and treasuries, right? So they loan you money in the form of treasuries and you pay them taxes. So that's how they take care of basically their spending allocation. But the government is spending money like crazy. It doesn't need to in the eyes of many, including Moody's and more conservative economists, right? So the government is making money from taxes, making money from treasuries. They don't need to be spending this much money and be in this much of a deficit. So Moody's is saying that especially when interest rates are high, you don't want to have your spending out of control like this, right? Just imagine in your personal life, imagine that your mortgage, your car loan, your credit cards all increased in percentages. And now more of your money is going to paying interest on your house, your car loan, your credit cards. You're not going to keep your spending the same. Well, not only is the U.S. government not just keeping the spending the same, they are increasing the spending, which is crazy at a time like this. So I happen to agree with the general sentiment here, whether it should be, downgraded to, or whether it should be looked at as negative. The outlook is negative. I don't know, but I do agree that the government is spending too much money. Now, does a negative outlook, how does that affect stock prices? What happened the last time? Okay, it's important to note that before the last two downgrades, which were the only two downgrades in U.S. history, right, there was an issue of a negative ratings watch, just like now, right? So when Fitch downgraded the U.S. debt in August 1st, 2023, it wasn't just a complete surprise. May 24th, 2023, this is when Fitch placed the United States AAA on rating watch negative, similar to what Moody's did, right? Outlook to negative. So Moody's did affirm that the U.S. long-term debt should still be rated as AAA, but the outlook is negative, just meaning like a little warning bell, right? So Fitch had done this before. Now, let's take a look at what happened May 24, 2023, because that, it wasn't a total surprise, and we were facing a debt ceiling standoff. But, still, it's not something that happens routinely, whether we're talking about negative outlooks or we're talking about actual downgrades. This isn't something that happens routinely. So let's take a look at what happened. May 24th was actually the bottom of the consolidation, right? So we were consolidating from April, and May 24th was actually the bottom, right? The day that Fitch issued a warnings outlook, right? A warning outlook. That was the bottom of the consolidation. We actually rallied from that day up until, almost 12% up until when? This is very important to note. Up until the day that they actually downgraded. So the downgrade was August 1st right here. And that was the beginning of this entire downturn that lasted until October. So this entire correction started the day that Fitch actually downgraded. So the negative rating or the negative outlook, right? Again, just a tiny warning, that didn't do much to the market. As a matter of fact, it propelled the market. But the actual downgrade is what started the correction. Now, let's take a look at the last time the U.S. downgraded, August 5th, 2011. So August 5th, 2011, the government was also facing a debt ceiling standoff. And not only that, but this was right after the great financial crisis. So I remember this very clearly because there were questions as to whether this was a bear market or not. Right after it seemed like we were going to recover from the 2008 crash, right? So here we go. On August 2011, this was the beginning of, I think this was almost, I want to say 20%. It was 19%. Yeah, almost 19%. So this was the debate of whether this was a bear market or not in 2011. But that was also the day that we saw a downgrade. So with that said, just based on data historically, again, this isn't a normal thing, but because we are facing a government shutdown, here's what I think is going to happen. Or what is potential here, right? We did pop above this trend line. And by the way, if you look at the NASDAQ, it's even more apparent. The NASDAQ popped above the trend line and then tested it as support and then rallied. Just like if you watch my video from last week, I thought that the rally would continue when everybody and their mom shorted Thursday, right? The day that we got one red candle, everyone thought that this was the end of this rally. I said that there's a chance that the market could go higher. So I actually did not short, and we ended up longing the next day as a day trade. We long NASDAQ for almost $1,100 per contract, and I did end up longing Tesla, ended up taking a loss as a stop limit, and then ended up longing it again. But we did go long, net long on Friday, not on Thursday, but when Friday the day started, it looked like it was setting up for another long following my thesis of that 3-line strike. Go back and watch my last video. Again, if you want access to all of our day trades, link is in the description below. I think you cannot afford not to be a part of it, but up to you. All right. So with that said, both the NASDAQ and the S&P 500 popped above this. NASDAQ actually tested it as support, which is a lot stronger. I think NASDAQ can go back to at least July highs by the end of the year. It is not that far away. NASDAQ is actually only 2.5% away. And NASDAQ from all-time highs, NASDAQ is only like 5% away from all-time highs, which is crazy. So, of course, when I said that the market can test all-time highs by end of the year, a few people were like, you're crazy, you know, there's no way that can happen. And then every video I'm getting, you know, someone saying, so you still think we're going to hit all-time highs? We're only 5% away. Even if we don't hit all-time highs, don't tell me now that it's not unrealistic, that my analysis was completely unfounded, right? We're not that far from all-time highs. But I do think that the negative outlook, as long as we avoid a government shutdown, I do think that the negative outlook could maybe give us a couple of bearish days. And I do think that the rally will continue. The only two things I'm looking at right now are we going to go in a government shutdown on the 17th? And on the 21st, we have NVIDIA earnings. Now, both of those things, I believe, can actually stall the Santa rally. Both of those things, right? If we enter a government shutdown and or NVIDIA completely whiffs on earnings, I think that can put a stop to this rally. I don't think, you know, that's impetus for a crash, but I do think it can put a stop to this momentum. Otherwise, on its face, just the actual negative outlook, even though if you read between the lines, again, they are affirming the AAA rating. So they're not saying that the U.S. has been downgraded, but they are saying that we need to this is definitely a little warning sign. Now, it'll be very interesting to see what happens to bonds, right? Because will the 10-year go back up and start retesting that 5%? Let's see what happened when the last time that we got a negative rating. Let's see what happened to bonds. If we take a look at May, May's when we saw that negative rating, and we saw some consolidation after, and then the market kept pushing. There are other reasons, obviously, why bond yields went up. And then in August, from the downgrade was the impetus for this massive rally in yields. So I do think that bond yields will maybe consolidate, maybe push up a little bit. I don't think there'll be a huge change in bonds just from this, right? Again, I think the government shutdown and NVIDIA earnings are way bigger events. Anyway, traders, make sure you get your name on this waitlist here. Again, nobody outside of this waitlist is going to see the massive discount for the mastermind, which gives you access to lifetime membership on the Discord, access to every mastermind session going forward, every mastermind recording historically. So you definitely want to put your name on this. Also, of course, if you're not interested in being a mastermind student, I don't know why you wouldn't, but you want access to the monthlies, click the link below. Our holiday discount code is already out. So either the mastermind, which gives you the lifetime access, or the monthlies. Both of those things are in the description below. Give me let me know, give me your opinion on this. Let me know what you think. Is this going to be a huge deal? Is this just a nothing burger? Do you think the rally will continue? Do you think this will stall the rally? How are you invested? How are you trading? Make sure you give this a thumbs up. Subscribe to the channel. Hit that notification bell. Stay safe out there, traders. Peace.